Well, they did it again. Bank of Canada has chopped the policy interest rate down to 2.5%. But I'll explain why that may not be such a good thing. Also, take a look at the September real estate stats to date and take your questions as always right here, right now on Live at Lunch. Thank you so much for joining me on this beautiful Wednesday afternoon. Summer is hanging on. Baby, it's hanging on. Yes. So summer is not officially over till this weekend, but there's plenty of good weather left, especially this month in September. So enjoy it while you can before it gets too cold, unless you love winter sports and things like that. But anyways, off the top, as I'm sure you may have heard by now, the Bank of Canada has made a cut to their policy interest rate, the first cut since March, I believe. So for 6 months, they've been just standing pat, keeping it to 0.75%. They have now reduced it to 2.5% by a consensus vote, apparently, according to Bank of Canada Governor Tiff Macklem. The entire, I guess, governing body had agreed to reduce it by a quarter point this time. And that they based their decision on three main factors, basically. So they take a look at a lot of stuff, not just CPI inflation and things like that. They take a look at the labor market. They take a look at a number of things. So speaking of the labor market, unemployment went back up again, I believe, to 7.1% in August. So that was a huge factor. And at the same time, there was softening of wages as well. So that's why I said, yes, the policy rate has dropped, but it's for a reason, right? So the economy is struggling, and people are losing their jobs, they're losing money. So that's one of the key factors as to why they made this cut. So like I said, unemployment, that was one consideration why they dropped it. A second consideration was obviously the inflation. I believe it came in at 1.9% again in August, which was the same as the previous month. However, they believe that upward pressure on underlying inflation has diminished. Okay, so that's why they felt confident that they could make this cut right now. And then again, obviously, the retaliatory tariffs that Canada had put on the US imports, that has been removed. So once the tariffs are gone, then obviously prices will come back down if any of those costs were trickled down to the consumer. Those hopefully now have been removed as well by the corporations. So you have those three main factors as to what led to their decision today to cut the policy rate down to 2.5%. And I keep referring to it as the policy rate, not to be confused with the prime rate. Okay, so just to explain how this works, basically the Bank of Canada sets the policy rate, and then the prime rate is 2.2% higher than that. So now that the policy rate is 2.5%, the prime rate becomes 4.7%, right? So if you have, let's say, a line of credit at prime plus a half, you would take the 4.7% plus a half percentage point, brings you up to 5.2%, which would be your new interest rate on any lines of credit. And the policy rate does affect line of credit. It also affects variable rate mortgages, not fixed rate mortgages. Okay, so if you have fixed rate mortgage, this does not affect you whatsoever. Only if you have a variable rate mortgage, now your monthly payments should come down unless you're in a static monthly payment, etc. But anyways, I don't want to get into too much detail on that. And speaking of fixed rates, they usually follow the trend of the variable rate mortgages. So, I mean, I don't know if they're going to come down or not. Hopefully they will, and give a break to people who are taking out fixed rate mortgages going forward. But once it's set, it's set. It's not going to change if you already have a fixed rate mortgage. It's only new people applying for mortgages going forward. And speaking of going forward, the next interest rate announcement is not until the end of October. So that's about 5-6 weeks away or something. And then after that, interestingly enough, the federal government will release their budget. So in November. So the budget obviously is not going to have an impact on the October interest rate decision. So if nothing much changes, probably they're going to stand pat again in October. And then if there's something in the budget that the Bank of Canada feels that will affect the economy, then we may see another decision, whether it's a cut, whatever it is, in December, right? So we have two announcements left for the year, one at the end of October and one in early December, I believe. So I'm not, holding my breath on another cut, at least not for October. Maybe one in December if the economy continues to tank. So, okay, thank you to all who have joined me so far. And just to recap again, the main reason for this is that the economy is slowing down, right? So there are signs in the economy that things are happening, and not just the Canadian economy, the global economic growth is showing signs of slowing down as well. So this all factors into their decision. I talked about the unemployment rate, and I talked about the CPI inflation rate as well. So if you have any questions on that, I'm happy to elaborate a little bit as much as I can. If not, I will move on to the real estate stats. And I did release those a couple of weeks ago when they came out from the Toronto Regional Real Estate Board for the month of August. They weren't very good. And just in a nutshell, basically home prices have come down all across the board, except, interestingly enough, in Brampton and Oakville. So in Brampton, they actually went up about 2%. So I'm not sure what's going on in Brampton. For Oakville, it's because it's a very small sample size, and they have more large homes than anybody else in these regions that I trade in. So that's probably why. But in Brampton, not sure what's happening there. Days on market was the other big change that went up significantly. Right, so buyers are obviously taking more time and looking at more houses because the inventory is up, right? So more supply, more houses to look at. Buyers are taking their time. Buyers know that now they have the advantage. So things are taking a bit longer. They're not pressured to put in an offer as they were before during the pandemic when things were flying off the shelf, and things were selling in a matter of hours, never mind days or weeks, right? So it was pretty crazy back then. And just to be clear, nobody likes that kind of market. Not even agents like that kind of market. As I explained to one of my clients recently, if you're on the listing side, it was very hectic. But if you're on the buying side, it was like shooting dice, right? Because every time you went to put in an offer, you'd have 10 to 20 other people putting in an offer at the same time. So there was no guarantees of anything. You could be working with a client for months and not get a single paycheck, right? So pretty brutal. Okay. And that's that. I mean, obviously, sales volume was also down all across the board. But interestingly enough, more significantly in places like Toronto, Mississauga, but not so much in Brampton. So in Toronto, Mississauga, it was in double digits. It came down, but in Brampton, it was only 7%. That I'm looking at the wrong thing. 19% and 23%, so double digits in Toronto, Mississauga, but in Brampton, it was only 3% that came down. Maybe that explains why prices went up a tad. Who knows? And again, sales volume, i.e. demand, came down more so than supply, right? So, which means that the overall market is slowing down, right? So months of inventory is increasing, giving more time to buyers. It's shifting it more into a buyer's market versus what we were used to before as a seller's market. Right. But the good news for some is that appears to be turning around. Okay. Those numbers, as bad as they are, they weren't really a shock because August is traditionally the slowest month of the year, right? So people were kind of expecting that things would be slow in August. So again, it's not really a shock. And things tend to pick up in September after Labor Day, after kids are back in school, people are back from vacations, everybody's back into their normal routines. Things start picking up real estate wise. And so far, it does appear that way. I mean, I don't have the official stats with me, but just looking at our, back end booking system, which kind of keeps track of all these things for the most part. It doesn't cover every transaction, but it does cover a significant number of transactions, maybe 80, 90% or something like that. I can see that during the first half of September, compared to the first half of August last year, we're way ahead from where we were in August. And both in listings and in sales. So both in supply and demand. For some reason, well, I guess people, they know that things don't sell over the summer and things don't sell in August, so that's why they probably were waiting until September to put their house on the market. So in Toronto, for example, we saw a 59% increase in the number of listings in September versus August. Now, again, take that with a grain of salt, because some of these might be relists, right? If somebody was on the market and just gathering dust, not going anywhere, they would take it off the market and then relist it in September, right? So it doesn't necessarily mean, all new houses come up. So some of these might be relists, right? So keep that in the back of your mind. But interestingly enough, sales volume was 9%. It was 59% increase in supply, but only a 9% increase in sales volume in Toronto, right? So that's like 1/6, right? So that's pretty bad. In Mississauga, well, Peel region, I'm going to put Mississauga, Brampton, and Caledon all into one. So in Peel region, we saw a 20% increase in supply, yet only a 10% increase in demand. So about half, right? So out of the, let's say, all the new lists that came out and relists that came out in so far in September, only half of them have been sold so far in Peel region. And then showings obviously went up as well, right? So 15% increase in showings in Toronto, and about 3.5% increase in showings in Peel region. And interestingly enough, offers went up as well, which obviously, if you have more sales, you could be having more offers. But what's interesting to me is that in Toronto, I'm going to start with Peel region, because in Peel region, the number of offers went up approximately 9.5%, and sales went up approximately 10%. So it's pretty even there. So you can see that, for every offer that goes in, you probably get a sale in Peel region. But in Toronto, it's a different story, because the number of offers went up 18% versus the number of sales only going up 9%. So again, about half the offers that are going in are resulting in a sale. So I don't think it's competition. It's probably low balls going in. So people are trying low ball offers. It's not going anywhere, and only half the offers that are going in are actually working to generate sales. And that could be condos, because the condos are just sitting there. So maybe somebody, an investor or something, is just saying, what the hell, I'll just put in a low ball offer and see what sticks, right? See what happens. Not much change in the days on market. Less than 1% it went down in Toronto, and about 2.5 days it went, not 1%, less than 1 day it came down in Toronto, and about 2.5 days it came down in Peel region. Not much change there, but it's to be expected, obviously. If there's more inventory out there, and buyers are increasing the number of offers, and the number of sales are going up, obviously maybe the days on market will be coming down a little bit. So that's that in a nutshell. If you have any questions, by all means, you can ask them here, and I'd love to answer them while I'm live. If not, then you're watching this on the replay, by all means, you can still ask your question, and I'll try to answer it as soon as possible on Instagram or wherever you're watching this. And if you'd rather send me a DM, by all means, you can do that as well, and then I'd be happy to get back to you as soon as possible. So enjoy the rest of this beautiful day, and enjoy the rest of September. I will see you next month.